Good morning, everyone, and welcome to the Quantum Leap Morning Leap session for Monday, November the 7th, 2016. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live sessions to take a look at the market, macro to micro, take a look at the structure of the market, then drill down to our trade levels, our targets, and our hypotheses for the day. We create multiple hypotheses in order to have a plan in place for whatever the market throws at us. This is a subscription room, so if you're interested in checking out, please send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do this live every day in the GoTo, and then we do live trading and analysis during the course of the RTH trading session. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so taking a look at what happened on Friday first. Friday, we were looking for a rotation down and then finding buyers down in the and getting a false breakout. That was our hypo 1, and then a rotation up towards the upper distribution. We were looking for that 2095 and a quarter to get hit with maybe a late day probe up into the 2097. It kind of rolled over, Friday, missed that 95 and a quarter by 4 ticks. And then we started getting these lower fractal highs and lower fractal lows, and that's where we started saying that that's not good for the longs, and that we should be looking for the possibility of a rotation back down into testing this 85, 86 area. They got down there. They did not bounce. They pushed through, and we were looking for, excuse me, a new low to be put in. And I was looking for close in that 77.50 area. They closed at 79.75. They did push through in the ETH, and we went and put a lower low in the ETH session and had a weak close. Now, typically, this type of action near the close, you'd be looking for continuation on Sunday night and a move down to test that 76 area and probably back into balance down in that micro composite. Well, the FBI came out and said that the email investigation on Hillary was over and that there was nothing new. And of course, we get this huge gap up on Sunday night and got over a 30. We had a 30-point. Thereabouts a 30-point gap up. The gap was actually 29.75 against the close, and the range gap is around 15. So a huge gap up. But I always like to start my day. Let's take a look at the news first. There's not a lot of news today. The big news is today and tomorrow the election. I think we're going to see some large rotations and oscillations. So just keep everything tight. I warned everybody last night just to keep it tight and not get caught position because it was likely to move in either direction very quickly. And we basically rotated around that open around the 2108.50 area, which just happens to be right at the 50% of the significant breakout candle. But I'll get to that. Looking at the news, we've got Euro Group meetings all day today. 10 o'clock, we've got Labor Market Conditions Index, Loan Officer Survey sometime today, then Consumer Credit. And then, again, we're moving into tomorrow into the election and whether or not we're going to get a Democratic or a Republican president. It looks pretty good for Hillary right now. The market is obviously showing it likes Hillary in the office with that big move up. So currently right now I start my day looking at a candlestick chart with a 9 EMA, 20 SMA. I'm looking for slope and separation, strength of the trend, where it's being challenged or violated, where we're getting continuation patterns. Of course, beautiful multi-year trend up, then challenged at the end of 15, beginning of 16, then we get continuation. Then we come down, and it looks like we're going to challenge this trend, and they come down all the way to the 20, and they bounce. Again, we're looking for the possibility of this turning out to be a falling 3, with this candle being that we're currently on right now this month being a big green candle as a strong continuation pattern. It certainly looks like that could be the case if Hillary gets in the office with this move up. Going to the weekly, we have our weekly open this week at 2106. It is still below the prior week open, which was 2120, and we're still below the 9 and the 20. So even though we get this big gap up, we still have on the weekly trend a move up into the 2122 before we even start challenging that downward trend that we're starting on the weekly. On the daily, we had something that you don't see very often. We had, this 9 days of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. This is one of the longest down streaks on the daily. And then, of course, now we get the gap up. We've got this huge gap. We're sitting just above the 9, which is around the 2105.75, and trying to continuation. It's not likely, if you're thinking that we're going to see this gap close today, it's probably not likely, but it's certainly within the market conditions right now that we can see rare events happening. Typically, you don't see a gap this big, and when you do see one this big, you do not get a gap fill. They just gap and go. But with the election and whatever news that comes out between today and tomorrow, you never know what can happen. So just we're in a very high volatility, place in the market. You just want to make sure that you're not stubborn and don't get stuck in a position and try to hold in a losing position, because it may not come back in your favor. I warned this throughout the whole week this week, because it's going to get pretty jittery, and market's going to make some big moves very quickly. So the daily is challenging the downward trend that we are in. Going to the intraday, you can see that again, you can see this big gap up. We did leave a whole bunch of naked crosses below between the 92 and the 82 level on multiple time frames. At some point in time, we'll come down and repair this. I just don't know if it'll be this day or this week, depending on what happens. But I'm sure we're going to come back down there. You see we're gapped up, and we're currently starting to trend up. We've got higher lows on the 4-hour, and see if we can continue this move up on the 4-hour. Going to the 1-hour, same thing, huge gap up. We're respecting the 9 EMA. We came down and tested it. Now we're bouncing off of it. We've got slope and separation. The trend is certainly looking to the upside on the 1-hour. On the 30-minute, basically you're seeing the same thing. We did challenge the trend, but we took it right back, and now we're getting this continuation pattern. I'm looking for any patterns. I'm not seeing any real patterns in terms of candlestick formations or chart patterns yet. I think this market is very much undecided, but they gapped up, and we had a pretty good Gaussian distribution overnight, so they accepted value higher overnight. We'll take a look at that in a minute. 15-minute, again, holding the 9 and the 20, and then going to the 5-minute. You can see we're holding the 9. We do have a naked cross right here at the 2108. 2108 and a quarter is the 50% of the significant breaker candle. I expect that we're going to test that from above. So I'd be watching. If we cannot hold the 9 and a quarter, to look for them to come down to that 08 level and take out that naked cross up there. Okay, so let's take a look at, first of all, let's just take a look at overnight. You can see that we gapped up. They came down, held the 2102.75, and we basically chopped around, went and made a newer high after Europe opened and was not able to continue, and we come down. We've got a very good looking Gaussian distribution here. So pretty balanced inventory overnight. Inventory is net long to neutral. Obviously, they liked what the fact that Hillary got that out of the way. That's not going to be an impediment to her presidency. Whether it's going to haunt her in her presidency if she gets elected is a whole other thing. Our overnight Globex VPOC is here at 2108, so pretty even. Taking a look at this on the bigger picture and taking a look at the structure, where'd my composite go? Hold on a second, I gotta revert this chart. There we go. I'll have to just quickly draw some profiles here, so just give me a minute to bring this up to date here. Come on. Okay. So we were up in this balance up here, and then we had our significant breakout candle, which is right here. Just before the breakout, the last price they tried to hold before they fell out of this balance is at 21.21. That is going to be a key target for us above if we can hold these levels. But we did, fall out of balance. We came down here. We came right down to our next big target below, which was down at that 2080.50 area, and then we tried to balance down here. Of course, now we've got a gap up, but the balance in the last 3 days is here at the 92.50 area, 93 area. Our key line in the sand is going to be this 2109.25. This is, to me, is going to define whether or not we continue up higher towards that 21 area or even up into the microcomposite value area low at 23.75. Ultimately, the microcomposite VPOC from the other breakdown, which is this candle here, is at the 2133.75, and that puts us back into this longer term balance where the VPOC is all the way up at 53. That's a little bit away from us right now. Right now we're back in this no man's land, in this low volume area around the 2109.25. Below it, I'd be looking for them to come down into the open of the week, which would be at the 2106, and possibly come down and test the overnight low at 2102.75 with maybe a touch at the 2100. Anything below 2100, I'd be looking for the 98 and possible continuation down into the 93. I'm not looking for us to come down and close out this naked close, at least today. That'd be a big move back, and I don't think with this gap, you've got to be looking at your normal gap rules. We have a very low probability of closing either the range gap or the gap close. So, very hard area in this area, so we really have to look back to our smaller time frames. So let's start taking a look at where we are. We're right at that key line in the sand. Our overnight high is 12. Our overnight low is 275. Our VPOC is right below the 50% significant breakout candle at 08. And that's that naked cross as well. And we've got a little, there's really not much there. So that's about all the information I can get from the overnight session. So it's going to be a difficult one today in terms of level. First of all, our 20-period daily ATR is running at 1999. So our upside daily ATR target from the overnight low is up here at 2275. Our downside daily ATR target is down here at 92. So we do have the range capabilities of coming down and hitting this 92. Whether we do or not is going to be the question. Obviously, 2100 is going to be a key level for us. Below that, we've got the naked VPOC at 98 and down at the 95 area. The range from the prior day missed that by one tick. I'm going to be using that as a gauge. If we get back inside of this distribution of Thursday's upper distribution, then I'd be finally looking for them to come down and take out this 95 area. And then the range high from Friday would be my next trade area, and below that I'd be targeting the downside daily ATR and the HVN of the upper distribution from Friday. That is at, it's 2091.50, just below the daily ATR. I'm sorry. No, that's right, 91.50. All right, and then we have an LVN here at 90.50. Value area doesn't mean much to me. Below that, I'd be targeting the 88.75. Using the midpoint in the VWAP, and then a move down below there, I'd be looking for a move down into the 84. The open, and then down here into the naked VPOC and naked close, with the range low being a key level for us. So those are levels to the downside. To the upside, above, it gets very difficult up here because there's not a lot of guidance. We have the 15 and 1675 area. So I'm going to be using the 1575. And our key target above is going to be that 2121. And then we have our daily ATR, and then the big is going to be this 2350. And above the 2350, I'm targeting the 2750. And then 2850. And then next big target is going to be that 3350. Okay, we've got that. So those are the levels. Now, what's our hypothesis? Well, my main hypothesis for the day is going to be rotation, because I think that, with this big gap up, we're not likely to get real big range extension today. I think they're going to fight in the 2100 to 2115 area. But we've got to have a game plan in place. So I'm looking for an open auction, out of range. I expect to chop around this 2109 area in the beginning, likely taking out the overnight high and coming back down to the overnight VPOC within the IB. But eventually I'm looking for a move down towards the 2102.75, and somewhere between there and the 2098 area, I'm expecting initiative buyers to step in and take us up and just chop around in this area up here. I give it a low probability of the gap range close, but it's within our range, so I have to have a plan for that, and that would be my main plan for that. Secondary hypothesis is an open auction outer range, and failure to take out the overnight low, push up through into the 1575 area, chop around here, and then push up into the 2100 and close 2121 area and close somewhere up here. Hypo 3 is an open auction, out of range, take out the overnight high, find responsive sellers stepping in, push us down into the 2100 area, fail at the 2100, and then come down and challenge the gap close at 2094 and a quarter, taking out these two naked VPOCs, then fail and push down through into the 88, mid 80 areas and close somewhere in this upper distribution. And then Hypo 4 is a open test drive or an open drive, push up right away into the 1517, push up into the 21, and then continue and get a gap and go trend day up into the 2133.50 area and come up here somewhere. This weekly is not valid. So those are my 4 hypos, but really, they're all centered around a lot of rotations and a lot of oscillation. So just be careful. Take your hits and book your profits quickly, and then move on. Don't try to be a hero today. We're currently above the Keltner center line at 2109 and above the key line in the sand, looking for them to do this dance they've been doing lately where they're putting in an overnight high or an overnight low on the open and taking that stat right off the table very quickly. A move up to the upper Keltner takes us up into the 2114.50. If we do break below the 2109 center line, move down to the lower Keltner will take us down to 2103.75, but by the time we're there, this is likely to be in around that 2102.75. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.